Mr. Suresh Venkatachari, the Chairman and CEO of 8K Miles, joins us now. Suresh, thank you very much for joining us. Can you take us through the numbers? Your sales growth quarter on quarter is a handy 27% and profit as well up 30%. Can you take us through what the margins were and whether you can maintain? I think, okay, your EBITDA margins are at 31.5%. Are these rates maintainable?
Yes, actually, yes. Currently, we are building, as you know, we are building solution-based, cloud-based solutions actually. So we will be releasing a couple of more solutions in the next half of the year. So that will lead into more higher EBITDA margins actually. So we basically help companies with the cloud solutions where the primary business, what we do is helping them to architect and move the application into the cloud. The second part is what our annuity revenue stream, where we do the cloud-based managed services and also provide SaaS-based service. The managed services and SaaS service have a high profitability compared to a fixed price engagement.
Okay. Mr. Venkatachari, morning. So can you just tell us by the end of this fiscal, what would the margins stand at? Will this 31% be something that you can hold?
Actually, we did a 36% EBITDA on this quarter. Actually, EBITDA margin is 36% actually for this quarter, and we continue to hope to maintain the same phase for now and probably increase over a period of time. As you know, the cloud market itself has actually started to grow and started to mature. People have started adapting. So as more adaptation is happening, our sales will increase, and we deliver solutions on a fixed price basis using our IP and tools. So that will enable us to maintain a higher profitability over a period of time.
Okay. Will you be raising capital?
No. Recently we did a 55 crores warrant issue.
Yes.
And also internal sales accrual, we did about 15.2 crores as of this 3 quarters. Okay. So we are sufficient for right now. Maybe during a right time we may explore, but not at the moment.
You recently acquired Surge Solutions. Did any of this money raised was any of this money raised used for this acquisition? And can you just tell us a little more about this HR consulting company that you acquired in terms of how it's going to add to your revenues going ahead?
Surge actually provides a Epic-based healthcare, EHR. They help a lot of hospitals in terms of implementation EHR. And what we are doing is using that as a framework. We are building a healthcare analytics platform, which will be released during mid of 2015 this year. And that will enable us more sales actually through managed services and solution SaaS model. And also what we are doing is currently we are exploring those clients and making them healthcare into a cloud-based model. Last quarter, we won a major contract with one of the EasyIM, our SaaS offering for a healthcare company, CareCentrix. So which manage about more than 23 million patients actually that we're using as our SaaS model. So where we can able to sell this kind of an opportunity in the hospital. So that's our growth strategy. Actually, we believe healthcare and pharma is 2 areas we'll be launching solutions very soon. So that will expedite the growth.
Okay, so in your current revenues, Surge revenues are included?
We included about 2 months, November and December.
And what will be the rate of growth of Surge revenues, annual rate of growth?
See, what we initially it will be maintained at a similar phase, but over the next 2 quarters, where we release a new solutions, it will be accelerated actually. So what we are doing is we integrated the company in the last quarter. And all the new strategies just rolling it out. So we would be able to see a well-defined growth probably in the next 2 to 3 quarters. What
is your free cash flow annually, Suresh? And will you be looking at more acquisitions?
Yes, actually we generated about 15.2 crores so far. And probably with the warrant also, we will be able to actually acquire probably one more company. We are looking at we are evaluating a couple of options at the moment, but nothing is in the final stage. So it's pretty early, but definitely we will be looking to expand ourselves more, grow organically as well as inorganic. As you know, the cloud market started maturing. Now we need more people on site in the US as well, so that will help us to manage large enterprises. Initially, we started like a kind of more of an offshore from India all the time, and we started growing in the US, and the presence is actually growing, and which help us to win large clients actually.
Okay. So what kind of an opportunity do you see in the next couple of years in the cloud computing business for the industry as a whole, and how much could you benefit from that? In the sense, I'm just trying to understand what could your revenue growth be over a period of 2 to 3 years?
Absolutely. So the cloud market is actually about, by 2016, is going to be $45 billion space. It's the infrastructure and the software as service, the space what we operate, and security. And it's actually continued to grow, and the various, we had a discussion with the various Gartner analysts and other analysts actually, and looking at our solution and offering. They predict the market will from 2016 to 2020, it will consistently grow in the space. And we could able to leverage as we automate more solutions, actually solution-based selling, which will automate to help us to grow and take definitely a good market share. And our goal is to be primarily a cloud-based solution provider in the healthcare and life science. Initially, the first focus, and probably will be expand to financial services as the market start adapting cloud computing. But as a market, still only 5% of the CIOs are actually fully utilizing cloud. And in fact, in February, we are hosting a 2 CIO conference with the CIO magazine actually. So that's we will find out more.
All right. Well, actually, I have a few more questions on your numbers itself, Suresh. You know, you did what, 6 rupees EPS last year? You're already at 12.6. That's a fairly fascinating growth in earnings. What may you end the year in terms of earnings? And, you know, from 6 to whatever, 13, 14 rupees that you might do for the year end is quite a growth. Can you maintain this kind of a jump?
See, as you see, we are, even the cloud market is big, and if you see, our company is still a very emerging company. We are still a very small company right now, right? But we see an opportunity to be in a very leadership space. And our model of the growth itself, actually, we planning is not based on our people. It's based on solutions. See, as the SaaS solutions and managed services kicking in and more annuity coming in, our profitability will substantially improve. To just give you a simple example on the managed services, if you understand this, then you'll know how the profitability will increase. If you do a kind of infrastructure remote support, an engineer can manage about 25 servers. But in the cloud space, our engineer can manage about 200 plus servers. So that kind of a volume, and we try to improve that kind of a manage more number of servers with a single engineer. Then your profitability increases much better.
But you're not giving me numbers, Suresh. I mean, 12 becomes what, 14 or 15 this year?
Oh, see,
give us some idea. I mean, this is quite a jump. Nobody who looked at your company last year, same time, would have expected 14, 15 rupees earnings. So give us some guidance. I'm not asking you, I'm not tying you down to a number. Give us a ballpark. I mean, is it another 50% growth? This is more than double, more than 100%.
If you see, I think probably I would be very happy to give you probably after two quarters. Okay. If you see, we are actually jumping pretty well. Our revenue actually doubled, almost doubled actually. So this was initially, we know we may be able to achieve this number, but we were not able to see how the market adapts. As I get the market matures, I can able definitely give you. I know you are asking me from the last quarter, but we will be able to give a financial guidance probably after 2 quarters.
All right. We'll touch base with you, Suresh, at that time. Congratulations and thank you very much for joining us with the details of the number, and thank you for staying up for us.